With technical analysis, the prices of all financial instruments move in upward and downward waves. These waves can be used to determine the trend direction and determine when a trend is ready to change direction. Wall Street veteran trader Bill Wolfe discovered the Wolfe wave pattern as a natural pattern caused by an imbalance between buyers and sellers. This trading guide takes an in-depth look at the Wolfe wave pattern and how it can be used to time price reversals in any market. What is the Wolfe wave pattern? In technical analysis, the Wolfe wave pattern is made of 5 alternating up and down waves used to identify high probability reversal signals. In this 5-wave price formation, there is a perfect symmetry between the first 4 waves. According to Bill Wolfe, the 5-wave price formation can be encapsulated within a price channel. Based on the theory behind this advanced pattern, the first 4 waves stay trapped inside the price channel, whereas the 5th wave makes a false breakout, signaling that the prevailing trend might turn direction. Independently, price channels only help traders know where the price is heading within the channel, but they fail to cast a light on where the breakout might happen. However, using price channels combined with the theory behind the Wolfe wave pattern, traders can have more insights into predicting these breakouts. Looking at the structure of the waves, the Wolfe wave pattern can help traders forecast price reversals and accurate profit targets that are easy to project. This naturally recurring pattern happens across all time frames, from the intraday charts to the daily and weekly time frames. Wolfe wave trading rules. Wolfe wave looks similar to the Elliott wave formation, but it follows different trading rules. While Elliott wave requires the waves to follow certain Fibonacci ratios, the Wolfe wave trading rules are easier to follow. To recognize Wolfe wave patterns, trades need to look at the following key rules. The Wolfe wave pattern can be found both in an uptrend and a downtrend. Bearish Wolfe wave pattern. The bearish Wolfe wave pattern matches the price structure of an upward channel or the rising wedge pattern. As the name suggests, this pattern signals a trend reversal from bullish to bearish. In the bearish Wolfe wave pattern, waves 1, 3, and 5 are the endpoints of swing highs, whereas wave 2 and wave 4 are the endpoints of 2 successive higher lows. To recognize a bearish Wolfe wave pattern, traders need to look for the following criteria. Bullish Wolfe wave pattern. The bullish Wolfe wave pattern matches the price structure of a downward channel or the falling wedge pattern. As the name suggests, this pattern signals a trend reversal from bearish to bullish. In the bullish Wolfe wave pattern, waves 1, 3, and 5 are the endpoints of swing lows, whereas wave 2 and wave 4 are the endpoints of 2 successive lower highs. To recognize a bullish Wolfe wave pattern, traders need to look for the following criteria. How to trade the Wolfe wave. Before traders can understand how to trade the Wolfe wave, we need first to understand 2 additional concepts that are behind the Wolfe wave theory, namely, the trend line formed by connecting waves 2 to 4, and the trend line formed by connecting waves 1 to 3 to 5. MET is called the estimated arrival time, ETA. At the same time, the line connecting wave 1 and wave 4 is called the estimated price arrival, EPA. Based on the Wolfe wave theory, ideally, the price is expected to reach the estimated price arrival, EPA, before the estimated time arrival, ETA. In a Wolfe wave pattern, the entry signal is triggered after the 5th wave breaks out of the channel and then reverses back inside the price channel. According to Wolfe wave theory, the 5th wave of the pattern must be followed by a false breakout. When the price reclaims the trend line connecting waves 1, 3, and 5, traders can hold the trade until the price touches the estimated price arrival, EPA. In other words, the estimated price arrival, EPA, is the profit target level. When you correctly identify the Wolfe wave setup, the endpoint of the 5th wave represents the ideal place to take a long or short position. Wave indicator is a fractal-based non-repaint buy/sell signal indicator for MT4. It helps forex and stock traders identify trend continuation patterns and price breakout signals in all market sessions. It applies a trend wave formula combined with a special price action pattern detector for showing potential trade entry positions. You can easily distinguish the buy/sell signals by following the green/red arrows printed at the